Okay. And let's do it. Now, there's a high degree of risk involved in trading. Boy, is there, huh? Past performance is not indicative of future results. In my opinion, I think that the market itself is trying to, I guess, look in the future, what's going to happen, but take the day-to-day events, and it's been a crazy mix, a very fast-changing world, and volatility's is way up right now. So I think you just gotta, if you do trade, I would cut my size way down, and I'd be very careful because this market is very, very tough. The trends are not holding. If you think about the day, we opened at the highs, went down 100 S&P points, and then we reversed, came up 100, and now we're about 15, 20 off the high. But I think that we're going to have to find other tickers during this period of time. I'll work on some over the weekend. Okay? That's my thoughts. Now, here's a bigger picture. If you take a look at it, this chart was sent to me, but if you look at the S&P 500 and you look at the green, that's the way the market traded during Trump's first term. I thought it was sort of a parallel version where it bottomed out at the end of March and then shot up at the end of March, not at the first of March. If you look at it, it's pretty interesting how that's started off March just like that, which means it probably get a retracement, then followed by another sell. So anyway, today I instructed Jonathan, said, let's put on some pocket puts. That's the best way to play a market like this. Go out and get past the noise and have a position, or as Carol just said, you can trade the SQQ and TQQ during this time period. Now, 3 points, I talked at a couple of webinars today. I want to go back over one more time. But if you're trying to get a grip of where the market is cycling right now, I discovered this during my class, and let me just go over it again. Daily open today was 57.66. My pivot number coming into today was 57.75, and the high on RB3 was 57.78. So if you look at the current S&P, we're 57.81, and 57.78 was the high this morning. So if you look at it from RB3's high this morning, now we're basically unchanged. Okay, going into this last hour. Now go back, Jonathan. Go back. I would define 57.78, 57.74 as a range you got to pay attention to next week. Take those numbers in the next week. They will be important. Okay. It came up this morning. The rally came up, off the news, tested that, and then failed, and boy, did it. In fact, I went to lunch with Jonathan today. He was in town, and during lunch it was down 100, and I think we're at lunch, we went down to a low on the S&P of 56.73. That's 120 points, 115 points. Okay, that was something else. They flushed it down there. And then another insight, Genesis marked the low of the day. Genesis either marks the low or high on most days, 4 out of 5 days. Today, it marked the low. Today, it marked the low. Yesterday, it marked the high. Okay? Let's go back in time and look at each day Genesis and see what happened. Monday, there's the high. Tuesday, there's the low. Wednesday, there's the low. This is all Genesis, 12 o'clock. There's the high on Thursday and the low today. So this is a very key time to pay attention. Whether it's a low or high tells you what's happened the second half. Okay? It's going to be right 4 out of 5 days. That's a great insight for everybody to use. Did everybody understand what we just showed you? I went through it pretty fast. Okay, good. So we're looking for a high or low depending on what the market does coming into that 12 o'clock hour. Let's talk briefly about pocket puts for new people. I will bring these out when I get to a real chaotic market that can't hold a rally, can't hold a sell. The pocket put spread is there because it's changing so fast that you can't adjust. But if you have the pocket puts, and I usually risk, Jonathan, 50 cents is what we use on the pocket puts. And they won't look good. They won't look good when you have a rally, but they look great when when you open up down, like is a tendency of a market like this, okay? The pocket put. What date did we go today? It's like an insurance policy on the market. I think we went out to April, if I remember correctly, so we got some time to give us some coverage. Got a term policy on this option, right? Okay. Now, there's a short lesson that we put together months ago for those that want to know more details, but that's pretty much the theory behind pocket puts. Let's take a look at numbers on the following: QQQ, NVIDIA, and Gilead. Okay, NVIDIA open, or the QQQ opened a month at 511. The QQQ right now, I mean, I'm talking about right this second, is at 492. That's a huge move down so far in March, 492. It went down to 487. Remember that number for next week. NVIDIA, a leading stock's been in a downtrend, opened a month at 123. It went down to 107.56. That was today. That was today. That's NVIDIA. Gilead has been a very interesting stock, and I've told people if it goes above 117.55, write that number down, I'm going to buy some Gilead. This stock has weathered the storm pretty good in this chaotic market. That's Gilead. Now, here's our schedule. I want to put it out there for everybody to digest. They're very popular coming in person. Great facility. We just had a great class, got to know the people there. And people like coming here and being face to face. And so our next class is April 23rd through the 24th. I think there's only one spot left and it will only take about 8 people. So then we got our big conference in June. That's June 1st, 2nd, 3rd, Sunday, Monday, and Tuesday in June. That's our annual conference here. They have that where they have the players tournament. And next week, if you watch golf, they'll be playing that. Then I have another futures class out to July 14th and 15th. My one-on-ones for July, I think, are gone right now, meaning before and after that futures class. Foundation class in August, a futures class in October, and then advanced class October 13th, 14th. That is the small classes outside Sawgrass. Any questions about any of that before I go to the next slide? Okay, if there's no questions, let's go to the next slide.
That should be it, Tom. Let's go live.
Oh, that's it. Let's go live then. Let's go look at the current market and analyze it. Let's start with the E-mini, Jonathan. All right, if you see Genesis, you can circle it right. Can you circle that on that chart?
Yeah, sure can.
That's the low of the day, and that's a significant low, okay, going into Monday. Now, RB3, circle RB3, and that bar prior to RB3, how high was that red bar that went up there that we fell into RB3? See it, John? What? Yeah, there. Yeah, that high there. Now, we came back, RB4 was bullish, so a short-term number to know is 57.44, the low of RB4 going into Sunday night and Monday. That's E-mini. All right, let's go to the QQQ. The QQQ made its low there at 12 o'clock, and it's running into resistance at the same place everything else is. The QQQ's low, write this number down, is 487.52 on RB4. If it breaks that, then you go back and test that low from Genesis. That's how that works. Any questions about that? Everybody see the RB4? You can circle that, can't you? RB4 where you can see it. Okay. Now, I think what this is telling us, folks, we've got to expand our database. And the way we do that is through our scan list. John, show the scans and show stocks that are long and stocks that are short. Over the weekend, I'll bet these and we'll have them Sunday night. This is our report that we use, but this will vet and give us some ideas. Those are stocks that we might look at long. I see Hershey's on that list. CE's on that list. Okta's on that list. Okay, let's go to the shorts. There's the shorts that's on the list. I'll go through those and Sunday night give you the top 3 candidates for up and top 3 for down. Folks, I'm going to wrap it up. I'm trying to get my office back together at home. Everybody have a great weekend, and we'll just see where this baby closes, but that should give you a flow. Study the videos that we did today at noon. Jonathan put that in there for everybody. Okay? So I'll see y'all again. Thanks, Jonathan.
Thank you, Tom.